Consider a cryptocurrency that has lost nearly all of its peak value, yet still commands a $50 million valuation. That is POPCAT. It serves as a clear indicator of how high the stakes can get in the world of crypto momentum trading. This split-screen chart maps out POPCAT's historical price action.
Meme coin, native to the Solana blockchain. It exists in the same ecosystem and rode the same wave of community attention that brought visibility to tokens like Dogwifhat and Bonk. For many retail buyers, the appeal is the simplicity. You need zero technical understanding of blockchain infrastructure to buy it. That simplicity comes with a trade-off. POPCAT solves no real-world problems and has no intrinsic utility. Its availability on major exchanges like Coinbase or Crypto.com can make it look like a standard, safe investment, but its survival relies entirely on sustained community hype and viral internet momentum. Buying POPCAT is a direct financial bet on human attention and internet culture. Currently, POPCAT's market capitalization sits right around $49.6 million. That valuation is spread across a total supply of just under 1 billion tokens. This comparison matrix shows how that supply is structured. POPCAT has a fully circulating supply, meaning almost all of those 1 billion tokens are already trading on the open market. This is an advantage for speculators. You don't have to worry about venture capital unlocks or hidden vesting schedules dropping new tokens onto the market and diluting the price. The counterpoint is that there is no burn mechanism built into the token's contract. Because no tokens are being destroyed, the asset cannot manufacture scarcity over time. Since the supply cannot decrease, any future price increase depends exclusively on constant waves of new buyer demand. That brings us to the immediate price momentum and the recent cautious bounce. Active traders are looking directly at this level. We have a horizontal resistance line sitting just above 5 cents. That line is reinforced by overhead resistance. These blocks represent the volume of historical trades made by investors who bought in at much higher prices. Many of these investors have held through the 97% drop and are waiting to sell as soon as they can break even. This historical baggage means every step upward will likely be met with immediate sell pressure. To break out, POPCAT needs an aggressive surge of volume. That makes it a highly leveraged short-term play, rather than a steady recovery. Deciding whether to touch POPCAT depends on what kind of market participant you are. Let's look at the decision matrix. First, for the mainstream retail investor, looking for passive growth or a long-term fundamental hold. For this group, the verdict is avoid. You are better served by preserving your capital and staying away from assets with no utility. The trade-off is simply the possibility of missing a quick meme-driven bounce. Then there is the speculator, the active momentum trader. For this profile, POPCAT is worth watching. The goal here is to trade a potential break of resistance at the 5-cent level. The trade-off is the risk of losing your entry position if the network volume disappears. Treat POPCAT as a speculative community trade, not a secure financial investment. If you found this helpful, smash that like button, subscribe for daily crypto breakdowns, and share this with someone who needs to see it. Drop your thoughts in the comments. Are you bullish or bearish on this one? POPCAT forces a hard look at the difference between what is actually a bargain and what is simply heavily discounted.